Hey, what's up, everyone? Welcome back. Today, we've got some seriously juicy updates coming your way. From tech giants slimming down their workforces, to the almighty Netflix facing a reality check, to the European Central Bank scrambling to wake up a sleepy economy, and even a chip maker making AI dreams come true. Yeah, we're diving deep into all of it. But don't worry, I'll keep it real, keep it fun, and keep it moving. So grab a snack, settle in, because we're about to break down the biggest stories that are shaping the world right now. Let's get into it. Meta, the company behind Facebook, Instagram, and WhatsApp, is tightening its belt once again. This time, around 100 employees across various teams got their walking papers. The company calls it permanent efficiency. I guess when you say it like that, it sounds like a fancy diet instead of a job cut, right? CEO Mark Zuckerberg is doubling down on his whole year of efficiency thing. But for the people getting laid off, it feels more like the year of the pink slip. These cuts are happening mostly in the engineering and monetization teams. Some of the reality labs folks, the ones working on the virtual reality stuff that's apparently going to change the world, also got hit. So, while Meta is talking about building the metaverse and rolling out AI tools, in reality, it's firing people left and right. Efficiency sounds nice on paper until you're the one packing up your desk. The cherry on top of this chaos? One employee got canned over a $25 Uber Eats meal voucher. That's right, someone lost their six-figure job over some takeout. Now that's what you call a cost-cutting measure. The person apparently ordered the food for non-business purposes. Seriously, who hasn't? But hey, rules are rules, and Uber Eats is apparently where Meta draws the line. What's interesting here is that Meta has had a rough go in recent years, with all the scrutiny over privacy issues, a stagnating user base, and competitors breathing down its neck. These layoffs are just the latest chapter in a saga where Zuckerberg is trying to prove Meta is still lean, mean, and ready for the next tech revolution. Do you think Meta's efficiency measures are really about innovation, or is it just about saving a buck at the expense of employees? Oh, Netflix, how the mighty stumble. Netflix's stock just took a hit, dropping below a crucial line Wall Street geeks like to call the 50-day moving average. This is the first time in 2 months Netflix's stock has fallen below this threshold, and everyone is sweating about what's next. It doesn't help that earnings season is here, and Netflix is in the hot seat. Will the numbers stack up, or will the stock drop further? Pop the popcorn, because this is going to be interesting. Netflix has been riding the wave of global streaming dominance for a while now, but cracks are starting to show. Subscriber growth isn't what it used to be, and there's more competition than ever. I mean, even your grandma knows there are like 500 streaming services out there. The question on everyone's mind, can Netflix keep growing, or has it finally reached its peak? Adding fuel to the fire, the company has decided to hike up prices again. Because, charging more when people are already looking for cheaper alternatives is always a good idea, right? Wall Street analysts are split. Some think Netflix's gamble will pay off, while others are more skeptical. They've seen how this dance goes, and they're not convinced Netflix can keep twirling in the spotlight forever. Netflix has weathered storms before, but this one feels different. As competitors continue to gnaw at its heels and viewers start questioning whether another price increase is worth it, Netflix's golden era might be nearing an end. Do you think Netflix's price hikes will keep them afloat, or are they risking losing more viewers to competitors? The European Central Bank is back at it again, cutting interest rates like it's giving out discounts at a sale no one asked for. With the eurozone economy stuck in neutral, the ECB is trying to rev things up with another rate cut. This is the second time they've slashed rates in a row, signaling that Europe's economy is in trouble. Inflation might be cooling down, but so is the economy, and that's not exactly great news. ECB President Christine Lagarde is doing what she can to fight the economic slump, but it feels like she's playing whack-a-mole. You lower rates to stimulate growth, but it doesn't fix the underlying problems, like weak demand, sluggish business activity, and, let's face it, a world economy that's on shaky ground. Europe is a key part of that global puzzle, and if it stays stuck in the mud, we're all going to feel it eventually. Now, for you economics buffs out there, lower rates are supposed to encourage businesses to borrow and invest. The catch is, businesses are more interested in playing it safe right now, which means fewer jobs, slower growth, and everyone's least favorite word, stagnation. So, while the ECB is trying its best to jumpstart things, the road ahead is far from clear. And with inflation finally easing up, the focus is shifting to how we can get Europe's economy moving again without relying solely on these cuts. Do you think the ECB's strategy will finally shake things up, or is Europe in for a long, slow grind? Let's talk about Taiwan Semiconductor Manufacturing Company, the undisputed king of making the chips that power all our favorite gadgets. TSMC just posted some pretty sweet earnings, blowing past estimates for the third quarter, thanks to, you guessed it, AI. Everyone's talking about AI these days, and TSMC is cashing in big time. Demand for AI chips is through the roof, and TSMC is riding the wave like a pro surfer on a perfect day. Here's the deal. The world can't get enough of these advanced chips, and TSMC is the go-to manufacturer for big players like Apple, Nvidia, and pretty much every tech company you can think of. The AI boom is fueling their business, and even with the global chip market facing ups and downs, TSMC seems to be doing just fine, thank you very much. But it's not all smooth sailing. TSMC is also dealing with some challenges, like the global supply chain issues and the ongoing political tensions between Taiwan and China. There's always the looming threat that these geopolitical issues could mess with production, but for now, TSMC is raking in the cash and keeping Wall Street happy. What's fascinating is how AI is not just a buzzword anymore, it's driving real, tangible profits for companies like TSMC. The question now is whether they can keep up the pace or if the bubble is going to burst. Do you think TSMC can continue to ride the AI wave, or will the chip market hit a wall soon? And that's a wrap, folks. We've covered Meta trimming the fat, Netflix's stock drama, the European economy snoozing while the ECB tries to play hero, and TSMC surfing the AI wave. What a ride, right? Thanks for hanging out with me today. Now, if you want more updates, insights, or just to hang out with someone who loves talking news without putting you to sleep, hit that subscribe button. I promise, the fun's just getting started. Oh, and don't go anywhere yet. We've got something special for you. We cooked up a little tune inspired by today's stories, and it's about to play next. Trust me, you don't want to miss it.
Meta's back cutting jobs again. 100 folks gone in the end. Zuckerberg says efficiency's the key, but for many it's not what they see. Engineers, teams, and reality labs, WhatsApp and Insta feel the stab. Layoffs now, they're trimming tight. In the tech world, it's a constant fight. All tech moves fast, but people fall. Meta's chasing profits tall. Cutting jobs, they say it's wise, but there's more behind those eyes. Who's winning here? Who's paying the cost? In the end, what's gained and lost? Netflix rides the market wave. Third quarter numbers investors crave. Price hikes coming, stocks fall down. Earnings rise, but will subscribers frown? Wall Street's watching, holding tight. The numbers set, the future's light. Will Netflix keep its lofty throne, or face the fall all on its own? Streaming giants rise and fall, but there's risk in raising it all. Subscribers may stay or go. The future's a game, it's hard to know. Is Netflix safe in this high-stakes game, or will they fall in search of fame? In Europe, rates are falling fast. The ECB's cut won't be the last. Inflation's easing stagnant skies, but questions linger, will they rise? The economy's at a standstill slow. Will these cuts help the money flow? Time will tell if this moves right in a market locked up tight. Europe's fighting to stay afloat. Interest rates and hopes remote. Lower rates may bring the sun, but the battle's far from won. Will the cuts bring brighter days, or leave them lost in economic haze? In Taiwan, chips are leading strong. TSMC's where AI belongs. Profits soaring, quarter beats. Semiconductors fuel the heat. Demand for AI grows each day. The chip world's in the lead to stay, but competition's on the rise. The fight for dominance never dies. TSMC's ahead for now, but who will take the final bow? AI's booming, tech is bright, but the market's always in a fight. Semiconductors fuel the race, but who will own the topmost place? From Meta's cuts to Netflix climb, from Europe's rates to AI's time. The world spins fast in business too. It's all about what's left to do. In tech and markets, people sway. It's the cost of living day by day.